This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Feels like a Monday, but it is not. I'm Prashant Nair, and with me today, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Good morning, Prashant.
Good morning, Prashant. Good morning, Nigel. That's a good one. We're already one day down in the week.
Yeah, but it feels like you're coming out of a
Yes.
weekend, but we're not, which is a good thing because then you're closer to the
Yeah, but it was a great weekend, you know.
three-day long night.
After a long time, yeah.
Well, you know, the market needs to take a bit of a break from all that it is being seen, right? I mean, globally, we've been seeing some turmoil. So let me just actually kick it off exactly there. And we'll start with two-day change because the market today will respond to what happened on Friday. And then we will need to respond to what happened yesterday as well. So the last 2 days, this is the change on your screen. The S&P is down about 0.25%. The Nasdaq is up almost 1%. And the small cap index, the Russell 2000, over these 2 days is down a full 2%. So is there a real takeaway from this? I don't think so. I mean, you know, what complicates the matter is some of the other stuff, right? Now, straight off the bat, the government shutdown did not happen. That's the U.S. government shutdown. The deadline was over the weekend. There was a surprise. It was fast-paced, but it did happen. The next deadline is the 17th of November. So you basically, in the U.S., have a 45-day stopgap kind of arrangement. And we'll start again talking about, you know, this in the middle of November. But you know, although this is a positive, but I don't think the market in any way was discounting a big risk of a government shutdown or anything. So this should be read as okay. I mean, not a big positive or anything of that sort. What matters is that yields and dollar are once again going in the wrong direction. The 10-year yield, which had fallen significantly from its high of 4.68 to about 4.5354, is basically back up a full 11 basis points last night to 4.68%. That's a new 2007 high. And this is not great news. That's the risk-free rate that we're talking about, the rate around which pretty much all other rates are anchored to. The dollar index, it also hit a new 2023 high. It's now past the 107 level. Again, on the dollar index, I mean, if you actually looked at where the dollar was on Monday, you would have said, well, pretty comfortable. But last night, we saw a 0.75% move higher, and we are above the 107 level. What fueled this at the margin, of course, was data. So you had the U.S. manufacturing data, the ISM manufacturing index, which came through. That came in at 49. The expected number was 47.9. So it was much more, manufacturing in the U.S., according to this, is much more resilient. And that fueled the higher for longer rates narrative, that interest rates in the U.S. will need to be kept at this just under 5% level for much longer than what many thought. So that's the data which came through. But this week, we've got lots of other stuff, right? Important data. So you get more employment data later today. The ISM services number will come out tomorrow. Then we have the claims number, the jobless claims number, followed up on Friday with the non-farm payrolls, the labor market data with the big one, the monthly number, which is on Friday. So I think it's important. The big positive from a global aspect is the sharp drop in oil prices, a 5% sell-off in oil prices last night to just above 90. So oil prices, by the way, are from their recent highs have fallen almost $7-8, which is not small at all. Very, very large fall in a very short time span at 90 now. And I think unambiguously, this is the big positive for a big oil importer like India. Let's tie all of this back, right? So I would say cues from the global markets are mixed. Oil perhaps provides a bit of a buffer because dollar and yields are pushing up, which is not great news at all, not for the stock market, not for the rupee as well. So on the Nifty, if you look at what's happened over the last many trading sessions, all the way from Tuesday last week, the daily range has been broadening. You know, the highs are higher, and sometimes the highs are also lower. Higher highs and lower highs. Basically, it kind of shows you a little bit of indecision. Friday, again, was the inside day, which is we spent the entire session within the previous day's range. The highs, we spent Friday within the highs and lows of Thursday. So not very much in terms of a takeaway. Market came off. It was up almost 200 points. Then it came off, ended about 100 points higher. We need to see if 19,492 which is Thursday's low, can be a bit of a short-term bottom. So it's tentative, but I think that's number one. That's the first task at hand before we go any further. On the upside, you basically need the Nifty to take out the 20-day moving average, and that comes in at 19,786. And I think only above that, once we get a close above that level, can we say that perhaps the worst is behind. Bank Nifty closed in the green on Friday. On the Bank Nifty, we need to see if we can defend the lows, the recent lows of 44,182. I mean, these numbers are not very far away. These are very near-term kind of levels. And resistance for the Nifty Bank, first the 40-day exponential moving average, which comes very close by at 44,824. And then the 20-day moving average, which comes in at 45,034. I think the GIFT Nifty is indicating a slightly lower start. Okay, it's... we started, 19,579 on the GIFT Nifty. We kind of start around some of these support levels. 19,492 is not going to be very far away, which is last Thursday's low. So give it at least the first hour and a half before things start to settle down and you get a bit of a directional idea about what the market wants to do, especially because you're coming out of 3 days holiday. Yesterday was a market holiday, and also because so much is happening on yields, the dollar, and of course that big violent sell-off in oil prices as well. So take the first hour and a half, and don't jump right in one way or the other with what you want to do on the Nifty. Keep some of these near-term levels in mind on both the Nifty and the Bank Nifty. Surabhi.
Prashant, absolutely. But I want to be an optimist, at least as the week when it starts off, and that fall in oil,
yeah.
I think that was music to everybody's ears, right? We're looking at a price below 90, by the way, this morning. So that fall is sustaining. Let's see if that can become a kicker. Otherwise, as Prashant highlights, this is a huge rise in yields. And the dollar, we need to watch for the rupee, by the way. The rupee closed just about at 83 on Friday. But with now the dollar index above 107, that becomes an important trigger and a cue to watch as well. But some more positivity. By the way, a lot of the regional markets are closed for local holidays. There's a China Golden Week holiday that's playing out, so you don't have too many cues there. However, over the weekend, data from China was positive. The PMI number is what I'm talking about. Manufacturing PMI at 50.2 in September. It's the first time since April that Chinese PMI is in expansionary zone. So let's see if metals can react positively to that one Q over here. There's been good macro data in India as well over the weekend. Let's not take away from that. We had the fiscal deficit numbers come in. Now, the deficit has come in at 6.43 lakh crores, which is about 36% of the full year target. It's not too bad. There have been years where we cross 50%, well before the first half is even over. So this is as of till August. The revenue gap in the same period, that's April to August, is actually lower than last year. Tax revenues are extremely buoyant, and that's a good figure to quote. 2.84 is the revenue gap now versus 3.2 lakh crores in the same period last year, April to August. Then we had core sector data come out. That was also showing improvement month on month. The core sector numbers are up 12.1% in the month gone by, August, versus 8.4. And cement and electricity, those numbers are really firing away, the best of the lot in terms of the internals. Finally, auto sales, we'll talk a lot more about that as we go forward. Trends are a little muted. Maruti didn't exactly light up the charts. M&M's SUVs are selling like hotcakes. And the two-wheelers are kind of middling along. So we'll talk more about that. The one negative cue, if you have to sort of pick it out, is a consistent FII selling. And Friday was no different. That's a number that came in about 1,600 crores of net sell. Domestic institutions continue to buy. But I just want to leave this point on the table that the month that closed, September, is the first negative FII month in the last many. Finally, we have a sell figure of about 15,000 crores overall for the whole month versus a deluge of 47,000 kind of crores that we were getting in every month in April, May and June. So FII is selling, but I don't think, Nigel, anyone's complaining because the kind of DI appetite that's out there, it's more than made up for it.
Well, there's a tricky one actually this morning, particularly for the bulls, because the GIFT Nifty is suggesting we pull back 130 points. And if that is the case, we start off in the slot, for the bulls, because you buy near around 19,500, it's been beneficial. Not saying that's going to happen today, but the economic data that you're talking about was fairly positive. And you have the big fall in Brent crude prices as well. So it's going to be a bit of a tricky one. But if you have the appetite, then maybe you keep a bit of a stop loss. And in fact, you go and try to buy it at around 19,500. It was a good start, by the way, to the October series. We were highlighting this on Friday morning, that October traditionally has been a good month. 9 out of 10 times you have positive returns out there. The Nifty, however, when closer on the 20-day MA, we failed to hold on to that mark. So we continue to trade in this range. 19,500 on the downside, 19,800 on the upside. But what's really encouraging is the broader market outperformance. The mid and the small cap indices, you had plenty of stocks that did well even in Friday's trading session. Now, this is, in terms of overnight cues, besides the equity markets, the dollar index continues to march ahead. That's crossed that 107 odd mark. But Brent crude prices have corrected a good $6 odd, just in the last few days. And our markets will take note of that because that was getting a little bit worrying. So let's see how that one goes. There were signs of short covering. Yes, on the index itself, you had both the Nifty as well as the Nifty Bank that came in for a bout of short covering, but not from the FIs because they continue to add some short positions. And now with the addition that we saw in Friday's trading session, close to 4,000 short contracts is what they've added. The positioning goes that the net short positions move up to around 72%. And this is the highest net short positions we've seen in nearly the last 6 months or so. May not be such a bad thing. The global cues are in a bit of a tizzy, but when the FIs go overboard on the short side, that's what gives a bit of a glimmer of hope, particularly when you have them selling in the cash market. What are the levels you're looking at? The recent low, that's the low that we saw on expiry day, closer to around 19,500. That's a crucial level on the downside. We're hovering around the 50 DMA. On the upside, 20 DMA. That becomes a resistance zone. And also, if we're looking at the Nifty Bank, the recent low has been in that vicinity of around 43,800 to around 44,000. We have bounced out those levels multiple times in September. On the upside, you have the 20 and the 50 DMA that come in at around 45,000 odd. As I said earlier, the gift Nifty suggesting a big pullback. If you're brave enough and if you believe that, this 19,500 will hold out yet again, you're clutching onto good economic data and the fall in Brent crude prices, maybe it'll be favorable. But otherwise, the global markets are looking a little bit muddled.
Well, absolutely. They're looking a little muddled and topsy-turvy, aren't they? Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show today. We get you updates from markets across the globe. Ed Yardini of Yardini Research will join in to discuss the global trade setup. Our research team will bring you CNBC-TV18's list of top 10 stocks for the day. And at 8:30, we do a quick fundamental stock check with Nischal Maheshwari of Centrum Broking. So that's coming up.
Okay, so we'll get started with all of that in just a bit. But first, the equity call of the morning. Amit Sachdeva of HSBC says India's strong outperformance meets some resistance in the form of rising crude prices, firming US bond yields and risk of inflation. He says mid-cap rallies also warrant some caution and leave large caps relatively more appealing at this juncture and candidates for a potential re-rating. He says their proprietary sector radar points to banks, pharma, retailers, real estate, industrials, auto and telecom sectors as the ones that are still well placed.
Okay, let's get you some money market views. Abhishek Goenka of IFA Global says the dollar's strength triggered by higher US rates coupled with elevated crude prices is resulting in simultaneous stress on both current as well as capital account. He says September was the first month since February when we saw FPIs pulling out money from domestic equities. He adds rupee consequently has been under pressure. Goes on to say that he expects the rupee to trade between 82.4 to 83.7 to the dollar over the medium term.
On bonds, Ajay Magnolia of JM Financial says with the US yields trading around 4.7% levels, traders should avoid any fresh long positions as a holiday truncated week ahead of the MPC rate decision on Friday could keep the new 10-year benchmark bond yield in a range of 7.2 to 7.25% with a selling bias.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. But let's list down the stocks that we're looking at. Vedanta, Ultratech Cement, NMDC, Coal India, Bharti Airtel, IndusInd Bank, Federal Bank, and Suvin Pharma. Well, they are stocks that we're looking at in terms of positive news flow, while Biocon will be the lone stock that will be reacting to negative news flow. And we'll also be reacting to auto stocks, which could react mixed.
All right, Ed Yardini is now joining us, President at Yardini Research. Ed, good to have you. Good morning. Great, as always, speaking with you. Somehow, one is hearing more and more this commentary of higher rates, that rates are headed maybe not higher, but a lot higher. I don't know whether this is kind of consensus speak or something has changed at the margin. What's your sense? We had, JP Morgan's chairman and CEO, Jamie Dimon, here in India, and he spoke with us here at CNBC-TV18, and we asked him this question. And he also seemed to echo that maybe, higher rates are coming, closer to the 7% levels. What's your sense?
Well, I don't think higher rates are coming on the short-term side of interest rates. I think short-term rates have just about peaked. I think where we're having problems is in the bond market. And in the U.S. bond market, the problem is that we've just got much too much supply coming from the Treasury. So the deficit has been large, and all these securities are overwhelming the market at a time when the Treasury is actually reducing its holdings of Treasuries, and the banks are doing the same. So I think we're getting a little bit into a sort of a crazy mode here on thinking about how high rates are going to go. If they go much higher, something is definitely going to break. I mean, we know that the commercial real estate market is already in dire straits, and to see commercial mortgage rates go up any higher is just going to be a killer for that marketplace. So I think at some point the Fed may actually have to consider stopping its quantitative tightening because it's certainly not helping in terms of tightening monetary policy. Monetary policy is no longer just being determined by short-term rates. It's also being determined by long-term rates, and they're being affected by quantitative tightening.
Ed, hi. I'm glad you brought that up. You mentioned commercial real estate. As we look at 4.7% on the 10-year, and if the higher for longer narrative continues, could there be more accidents along the way? Earlier this year, we were speaking about mid-sized U.S. banks. What now? What does it mean for not just the economy, but just the way the interconnects between markets are playing out, banks and markets are playing out at 4.7% yield?
Great question, because it really does hammer to the point of is higher for longer really realistic? The reality is, even if the short-term rates stay at these levels with bond yields disinverting, we're seeing instead of an inverted yield curve, we're seeing a disinverted yield curve with bond yields rising towards the 2-year. And in that kind of scenario, we really are looking at potential cracks in the financial system. And it doesn't really have to be much more than commercial real estate. That's a very important market, and there could be a lot of defaults there. We are seeing some delinquencies on the part of consumers. The corporate sector seems to be in actually pretty good shape, but I'm watching the high yield market, because if I see high yield rates starting to go up, I think that would be another warning sign that rates are just already too high, and that higher for longer just isn't going to be realistic, that we're going to find some reason why interest rates are going to come down sooner rather than later.
Hi, good morning, Mr. Yardney from here in India. Yeah, I wanted to get your view. You know, you've given us your rationale with regard to the Fed. Maybe they cannot go the distance in terms of hiking rates, but what do you expect? Do you think they still have one more rate hike on the cards? That's point number one. And the second factor, I want to talk about the Indian markets. You know, everyone's saying September was a weak month globally, with US markets down 3 to 5%. We were up 2%. What's your view on the Indian markets?
Well, I think, first of all, with regards to the Fed, I think they should stop. They have been talking about maybe one more rate hike. What they've really done is they've said, okay, we're probably just about done raising rates, but we're still going to stay restrictive, higher and longer, as we've been talking about here. But I think at some point they may want to become less hawkish, because they are taking some real risks with the financial system. That I don't think they want to break the financial system. Meanwhile, the inflation numbers have been behaving pretty well. They've been coming down in a transitory fashion as opposed to a persistent problem. And right ahead here, we're going to see rent inflation coming down. With regards to India, like every country, is dealing with the global economy. It's interesting to see that there's some pickup in China, but China's economy, I think, is going to remain relatively weak. Europe's economy, I think, also is going to remain relatively weak. So the prospects for the global economy look as though they're going to be fairly slow. But among developed countries, the U.S., I think, stands out. And among developing countries, India stands out as a country where there's some excitement, where there's some diversification of businesses, and there's clearly a motivation to increase infrastructure and take advantage of the fact that companies are looking for moving their production from places like China to India.
Oh, absolutely, point taken. And just briefly, if you will weigh in on so this the difference between the U.S. 10-year and the Indian 10-year, the government bond yield, is at the lowest in a long time. Now, the fact is that every year the rupee the rupee here used to depreciate 3, 4, 5%, and expectations were for fairly meaningful annual depreciation. That has come off quite a bit. That expectation is that the rupee will come off sharply. It's come off over the last many years. Now, of course, the government bonds in India are also going to get into the global bond index, the JP Morgan bond index, which will bring in large sums of money on an annual basis, one stock adjustment, and then large sums of money. Is this really a worry, like before? The fact that there is, the difference is one of the lowest ever between the US 10-year and the Indian 10-year? Or you think it's different this time?
Well, no, I think that whenever you see some wide divergences on a global basis, you have to pay attention and ask yourself, what are the implications? I think the fact that yields are relatively low in India, especially compared to the United States, suggests that we're doing something wrong here in the United States, and you're doing something right over in India. And what we're doing wrong is we've got excessively stimulative fiscal policy where the economy is already doing quite well, but what's excessive is the deficits and the outlook for the deficits. And we're now finding that the bond market, back in 1983, I coined the phrase bond vigilantes, and now the bond vigilantes have decided that they're not happy with what they're seeing. I think they're okay with monetary policy. Tight monetary policy, bringing inflation down is a good thing, but the vigilantes' job is to do something about problems when the fiscal and monetary policies are out of sync with getting things right. So I think in the current situation, they're very upset with fiscal policy, with the size of the deficit, the size of the auctions.
Okay. Ed, finally, just a word on China as well. I mean, in India, the big narrative here that plays out is that we're big beneficiaries of the whole realignment of supply chains. And we've seen money chase that narrative as well, right? That's been the trade. Sell China, come into India. But do you see that reversing? I mean, the PMI data, for instance, that came out over the weekend, it was above 50 for the first time in many months.
Well, look, I think what we've learned in the United States is that if you get yourself into a debt crisis, it's best to deal with it as quickly as possible. It's best to take the losses, to restructure the assets that are distressed, and to move forward as fast as you can and not let it linger. I think China is going to let their debt crisis, particularly in the property market, linger. So I think it's going to continue to be an overhang on their economy. I wouldn't read too much into 1 month of PMI being slightly above 50. I think while manufacturing may be doing a little bit better, the reality is that they got a lot of their growth from the property market, a lot of their growth from infrastructure that was built with monies that were raised when provincial governments sold land. A lot of that game is over. And so I think the Chinese economy is going to remain under some duress.
Okay, Ed, very quickly, do you have a view on crude?
Excuse me?
On crude oil prices, do you have a view?
Oh, on crude. Yeah, I'm sorry. On crude, I don't think we're going to see the price of oil go up to 100 to 120. If it gets there, I don't think it's going to be there for very long. Every major recession we've had in the U.S. and on a global basis has been associated with rising interest rates and or rising oil prices. Now we've got both of them. Look, the Saudis would like to have the crude oil at $100 a barrel. They need the money for their Vision 2030. They want to spend a lot of money on diversifying their economy away from oil. Well, it's nice that they want it, but they may not get it because $100 oil sustainably may just be way too high for the global economy. And so I think we may very well have seen the peak in oil prices here for a while.
Oh, that's good news from an Indian market perspective. Thanks so much, Mr. Yardley, for stopping by and giving us your take on the markets, equity, bonds, as well as on the commodity markets. For the time being, though, we slip into a short break. On the other side, we'll focus on the top stocks you need to track. Welcome back. You're tuned in to Bazaar Morning Call. Well, our entire research team is standing by with CNBC-TV18's top stocks you need to track. But let me go first on Vedanta, since the big deal was announced post-market hours. Vedanta, they have announced the demerger of their diversified business by Unlock, and they believe it will unlock significant value. So now, if you have a Vedanta Limited share, well, they're saying you'll get another 5 more. So in total, you'll have 6 entities. The contribution in terms of an EBITDA for the last year, well, that should break up for you. Vedanta Limited, which houses Hindustan Zinc, gets bulk of its profitability from there. So that's obviously the largest constituent, followed by aluminium as well as oil and gas. How does it help the Vedanta group, though? You know, they get the flexibility to unlock value for investors. That's what they've said. How is that possible? They can either sell one particular asset or they can bring a strategic investor in any one of those assets. And from their perspective as well, it'll be tax efficient. Otherwise, they would have to sell the asset, then pay a dividend. So it'll be double taxation. One is on the dividend, and then they'll have to pay long-term capital gains as well. The promoter, Vedanta Resources, though their debt problem doesn't get resolved with this, there are big payments that are coming up, close to $1.3 billion in the second half of this fiscal. And in the next year, it's nearly around $3 billion. So in total, they have to pay more than $4 billion in terms of their debt. So in the near term, it's some bit of breathing space for them, but the debt problem doesn't get resolved. And if you're looking at the promoter stake, it went from 50 to 70%. And in the recent past, well, they've sold close to around 6% equity as well. So it starts in the green, but from there, we'll have to see how it goes. In fact, in just a while from now, we'll have Vikas Singh of Phillip Capital who'll be joining us to give us his view on this big development.
Okay, well, that's the big one, and we'll spend a fair bit of time between now and market opening and beyond as well talking about this important story. But there are more stocks which Nigel looks at. Ultratech, Coal India, NMDC, all have got news flow. Nigel, take it away.
Well, talk about having a good holiday and then, you know, have so much of news flow. It was difficult last evening. Well, let's address the news. And I'm looking at these 3 stocks, and all 3 of them should certainly open up in the green. First up, Ultratech Cement. The volumes of the past quarter, the India business was up by close to around 15%. You plug in there, you know, even the Middle East operations, and the total volumes were up by close to around 16% on a year-on-year basis. Jeffrey says that in the first half of the year, the volume growth is 18%. They're estimating 12% for the entire year. So clearly, as of now, the run rate is ahead of what Jeffries is estimating. And in a seasonally weak quarter, on a higher base, the capacity utilization level is moving up. So green on Ultratech Cement. Next up, NMDC. They have hiked prices by around 250 rupees per ton for October. We're getting source-based information coming from Steelman. And now the prices will move up both on lumps as well as fines. What are the factors at play? Odisha index, well, out there, I know fines had gone up, so that's why the street was sensing that. The pellet prices have been good, which could read well for Godavari Power and Ispat as well as Sarda Energy. And also there are talks that another price increase is coming about for steel. So that's why these guys, you know, they have that cushion to go ahead and increase prices. So that's NMDC. That should open up in the green. Coal India, the performance continues to look encouraging. The offtake for the past month was up close to around 12%. Year to date, it's up close to around 8.5%. And they're saying everyone's worried about the power supplies, the supplies of coal going to power units. In the first half of the year, it's gone up by close to around 10 million tons odd. So that reading is positive. So all these 3 stocks, I'm looking out for them in the green. There's some news flow, though, coming on Bharti Airtel. Sonal joins us to tell us about that. Morning, Sonal.
Good morning, Nigel. Well, yes, Bharti Airtel will be in focus because they have put out a press release, and that's where they're saying that it has over 50 million unique 5G customers over its 5G network. The 5G customers or subscribers, they've expanded from 1 million to 50 million within 12 months itself, according to the company. Airtel 5G Plus services, now they are available across the country in all districts in India versus the guidance that they given earlier of March 2024. So that's definitely a positive here. Total subscriber base as of quarter 1 of FY24 stands at 338.5 million. So some positive read-through from this data for Bharti Airtel.
Okay, thanks very much for that, Sonal. Well, more in terms of business updates coming through, IndusInd Bank and Federal Bank both put out their pre-quarterly updates. Abhishek is standing by with details on both. Abhishek, morning.
Morning, Prashant. So if you take a look, the business momentum for lenders remains strong, especially the private lenders. However, all of them are losing out on the CASA ratio or the low-cost deposits. So to talk about IndusInd Bank, the CD ratio or the credit deposit ratio is at 12-quarter high. CASA ratio is at 25-quarter low. So deposit momentum are pretty much stable at 14% YOY and about 3.5% sequentially. CASA ratio is at 25-quarter low of 39.4% when compared to 39.9% in the previous quarter. Retail deposit, that traction remains strong, growing at 21% YOY and about 4.3% quarter-on-quarter. Advances growth pretty healthy at 21% YOY and about 4.5% sequentially. CD ratio is at 12-quarter high of 87.5% versus 86.7% in the previous quarter, suggesting that the net interest margin could remain on the healthier side. For Federal Bank, the CASA ratio is at 14-quarter low. However, the business momentum on a sequential basis remains strong. Deposits are up 23% YOY and about 4.7% sequentially. CASA ratio is at 14-quarter low of 31.2% when compared to 31.9% in the previous quarter. Customer deposit, or the retail deposit you may call it, has grown at 19.6% YOY and about 4% sequentially. Advances growth pretty healthy on a sequential basis, are growing by 19.5% YOY and about 5% sequentially. Calculation shows that the CD ratio might have declined on a YOY basis but improved on a sequential basis. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Ekta. She's here to tell us about a couple of these pharma names. Morning, Ekta.
Morning. Well, I'll start with Biocon. I expect that stock to probably see a little bit of red today. That is because Boehringer Ingelheim, the German company, has launched the interchangeable biosimilar version of Humira, which is basically a biosimilar used for arthritis. It's a huge product. It had around $18.6 billion of sales before losing exclusivity in 2023. And this particular drug has been launched by Boehringer Ingelheim at an 81% discount to what is available in the market currently. So this is going to be a negative, or a sentiment negative, for Biocon, because they launched their version in July 2023. Around 8 companies have already launched the drug or are expected to launch the drug in the US markets, and hence the competition is rising, with a lot of price competition as well. So that could probably impact Biocon. Estimates are that Biocon can make up to $150 million from this drug with 5% market share by FY25. Suven Pharma, I expect that stock to be in the green because Advent has completed the acquisition of Suven Pharma. They acquired 50.1% for 6,313 crores. They're going to be triggering their open offers soon. They've earmarked around 3,276 crores for that. Advent has now appointed a new board and management. The executive chairman is the ex-GSK head, A. Vedahish. And we have Venkat Jasti, who is the Suven founder, who will be on the advisory council. So I expect that stock to probably be in the green today.
Okay, all right. Thanks a lot for that. Well, Sonal is back with us to tell us about some more auto sales numbers. Sonal?
Well, yes, let me start with Maruti because September sales were below estimates. Low single-digit growth is what is seen in September sales. Total sales up 2.8%, export sales up 5%, domestic sales up 2.5%. But these sales are lower than what Nomura expected at 1.87 lakh units in the month of September. If we talk about M&M, that was a mixed bag where we saw very strong SUV sales. However, tractors showed weakness. So total auto sales were up 17%. And in the UV segment, the company recorded highest sales for the third consecutive month, which was up 20% on a YOY basis at 41,267 units. In terms of tractor sales, they continued to be under pressure. They were down 11% on a YOY basis. However, their Bolero Max pickup truck across the 1 lakh unit mark this time around, and it has seen the fastest pickup across the categories that the company has seen. Eicher Motors saw a decline of 4% on a YOY basis in their September sales. However, it was in line with Nomura estimates, or slightly better there. CV sales were up 8.6% on a YOY basis. Hero Motor saw sales higher than Nomura estimates. Total sales were up 3.2%, which are in line with Nomura estimates. Domestic sales were higher as well, and so were export sales, which came in at 16,710 units. Again, TVS Motors, the numbers were higher than what Nomura was estimating. Total sales were up 6% on a YOY basis, higher than Nomura estimates. Motorcycle sales were up 10%, and scooter sales, they were up 8% on a YOY basis. Lastly, Tata Motors, domestic sales were up 2%, and their total CV sales were up 12%, indicating a good trend continuing for Tata Motors.
All right, lots of numbers there. Sonal, thanks very much for running us through. Let's quickly recap our list of stocks to watch out for today. The ones that have positive news flow around them are Vedanta, Ultratech Cement, NMDC, Coal India, Bharti Airtel, IndusInd Bank, Federal Bank, and Suven Pharma. Stocks that have negative news around them are Biocon, and the auto stocks may open up mixed, as Sonal just pointed out as well.
Okay, all right. So that's the entire list. But Sudarshan joins us to tell us about some more brokerage calls. He's been going through all of those notes. Sudarshan, what do you have for us?
In the brokerage corner, we have three stocks. First one is MGL. Jefferies has upgraded to buy and target is increased to 1320 from 1100 per share. It says lower gas cost and priority in allocation provides strong margin visibility over H2 FY24 and 25. Jefferies has also raised FY24-25 earnings estimates by 6% and 27% on higher volume and margin estimates. Second one is Shriram Finance. MS has written on it. It has an overweight call with a target of 2200 per share. It says company has increased loan growth guidance for FY24 to 18% from 15%. Also, festive season in October, November and agricultural harvest should aid the demand. Company expects 16% YOY AUM growth in FY24. Last one is Concor. Jefferies has a buy call with a target of 825 per share. Railways has levied 10% busy season haulage charge hike on container traffic effective October 1, 2023. Jefferies says 10% hike will have limited volume impact and cost pass-through should be seen over 1 and 2 months. Also, rail coefficient improved in August and Exim rail volumes rose sharply at 20% YOY.
Okay, Sudarshan got that. We'll keep those stocks on our radar as well. Thank you for it. Let's now talk commodities. And Manisha Gupta is joining in with all the action after that 3-day weekend. Manisha, so we're celebrating the fact that oil has cooled off. But you tell us, what's top of mind for you?
Oh, well, absolutely. A 3-week lows coming in for the crude oil prices. That has happened because of the profit taking. We've been saying that it is overbought, but the momentum has been on the higher side. But with the contract expiry, we saw the crude oil prices coming off. More importantly, there also is a OPEC meeting, which is on 4th of October. And then the markets are looking at higher supplies coming in from Turkey. And Saudi Arabia also has been saying that they might ease supply cuts there. A very sharp decline is what we are working with in sense of metals as well, especially gold prices trading at a 7-month lows with the dollar index trading at a 10-month highs. There is pressure that has come in for silver. Most of the base metal prices in Asia have started on a weaker note as well.
All right, Manisha, thanks very much for that. So that's commodities. We'll keep coming back to that. That's a big one. We'll take a quick commercial break here. Nishal Maheshwari of Centrum Broking will join in for some fundamental stock analysis. Later, we'll connect with Vigash Singh of Phillip Capital to talk about Vedanta's demerger plans. Stay tuned.
Welcome back. Well, plenty of stocks to discuss, and we'll get an analyst to talk about Vedanta Limited. But for the time being, let's ask Nishal Maheshwari, CEO, Institutional Equities and Advisory at Centrum Broking, who joins us. Hi, Nishal. Good morning. Your quick take on Vedanta Limited. It doesn't resolve things. It just gives them an option. What do you think about it?
Morning, Nigel. I think it's a bit of a confusion, actually. I don't know exactly what the company wants to do. If you go back into history, basically, they have been consolidating everything into a single company, and now they want to demerge it. So, and if I look at it on a total basis, basically, they have got around 1 lakh crore of debt, basically, between the Vedanta Limited and Vedanta Resources. And you have to understand there is no business in Vedanta Resources. It's just a holding company. And the EBITDA is something like 35,000 crores of Vedanta Limited. So you are anyway pretty stretched at 3:1 for the debt servicing. So let's hope some value is unlocked, but we do not see much value getting unlocked from here. So it's a tough one.
Vedanta, okay. Let's see if the street feels any excitement around this huge demerger with now 6 entities instead of 1. Nishal, good morning. Let's talk about cement. We have decent numbers. I mean, Nigel was just telling us about Ultratech, but overall, even the macro data that came out, core sector data, cement is really firing away. How would you play it if you would? What are the stocks that you would prefer?
Morning, Surbi. I think it's a bit of expected. Basically, we are expecting around 12 to 13% kind of volume growth for the year. And the second quarter obviously is a weak quarter, but this time, given that the rainfall was not very strong, we are seeing even the second quarter numbers are stronger. So I believe basically most of the analysts on the street are going to upgrade their volume guidance. And we are going to see a strong growth coming in as far as this current year is concerned. What we have to see is recently there has been some price hikes which have been taken, especially on the eastern side, whether they are sustainable or not. Our first analysis says basically that there is not much volume which has been taking off at those higher prices. So the EBITDA margins may not improve as much as what the analysts are projecting. So you might see some cuts in the EBITDA levels. But volumes may be higher. So overall, the profitability will be higher for the cement. Our top picks in the large cap remains to be Ultratech, and in the mid cap, we remain buyers on Birla Corp.
Okay. Nishal, good morning. Any thoughts on the big mover? I mean, a few big movers from last week. Navin Fluorine, Friday to Friday, ended almost 16% lower. There was, of course, that announcement of the CEO stepping away, and that market did not like very much. Berger Paints is the other one, which sold off 15% again last week, Friday to Friday. And there was Voltamp Transformers. There was a large block which happened in the early half of last week. First dilution, I think, the stock's down 10%. Any opportunities here? Naveen, Berger and Voltamp.
Morning, Prashant. We only cover one of the stocks, which is Naveen. Actually, the other two, I will not be able to comment much because we don't cover them. So, but in case of Naveen, I think this was pretty unexpected. The outgoing CEO has been able to scale up, has been able to actually give a very strong guidance also. And he was the person basically who had actually ramped up the whole capex. And the outlook he was guiding very strongly. So we were also expecting like 25% kind of a top line growth in the next 2 years. Now, I think that all has... so that is all up in the air for the moment, but we believe basically it's a large corporate. They will find the person. So I think at the moment there is some uncertainty around who's going to step in. The promoter has stepped in for the moment, but I think there might be some bit of more downside, but these are good prices to start nibbling away at this stock.
Okay. All right. Nishal, request you to just stay with us. For the time being, let's focus back on Vedanta. They have announced a big restructuring, and as promised, we have Vikas Singh of Phillip Capital who joins us on the show. Hi, Vikas. Thanks so much for joining in. Well, this seems to be a temporary fix, right? We need to see what happens next. Can the parent go ahead and sell one of these entities? So what comes top of mind is the steel asset. Could you tell us, do you expect them to sell that particular asset? And if yes, what is the rough value they can get for a couple of these assets?
Good morning, Nigel. Yes, they have already indicated that they would like to sell the steel assets as well as the ferrous mines as well if possible. Last, if you see that in the IBC process, most of the assets have gone up to 70% of their replacement value. So given that it's a long product portfolio and also currently has a potential to reach up to 3 million ton, so they would get roughly about I would say that roughly about 3,000 to 4,000 for the existing business and a couple of thousand crore for more for the potential depending on the civil work or the land bank they would have at that site.
$1 billion is what they can get for this asset or more?
A little bit less. $1 billion would be a higher side of the valuation, because these assets are not that strategically important. For example, last assets, Meeranchal Parts, which bought by Tata, was at a pretty higher rate because of the land bank as well as the strategic importance to Tata. But this is not very strategic important to anybody at this point of time.
Right. Vikash, hi, good morning. Just a quick word. Now, this entire plan has been put out, right? But this will require many approvals, from lenders, shareholders, regulatory authorities, etc., etc. Does this act itself, it provides flexibility down the line, but there are hard payment dates, right? Repayment dates in FY24 and then I think early FY25. Does this move help towards meeting those repayments, in your opinion, Vikash?
See, the timeline is 12 to 15 months. So definitely, though the flexibility coming in order to part sell this stake in this asset, they might not be able to meet the January deadline of $1 billion. So that is something which is the immediate of concern, and probably they have to dilute some more equity, or in case if they don't manage to refinance the debt as of now.
Vikash, so tell us overall, you spoke about the steel assets. Let's talk about all the 5 entities that are getting formed. There's also the energy assets which were under the erstwhile K in India. Do you see any value unlocking, quote unquote? Do you see that happening in any of these listed entities eventually as they list? And also a word on Hindustan Zinc, because there also this company is talking about potential reorganization. Now that will require a government approval, so that's a big one. But what would you expect on the Zinc side?
So basically, out of all the assets which are getting demerged, aluminium has potentially the best unlocking potential. Once it will become pure play, they are backward integrating into alumina as well as a fully integration into thermal coal as well. That would come in by FY25 end. So the profitability of aluminium business has a significant upside potential, and that would also spell out the best value unlocking thing as well. In terms of Hindustan Zinc, basically, they have decided to also bifurcate this segment into 3 different parts. Zinc and lead would be into one segment. Silver is another, and recycling business into third. We have to see that how they are going about it. But the way we see that they would like to get a better valuation for the silver division, because silver is getting bigger and bigger. They are about to commission their fumer as well. So silver, which is currently 750 KT, can go up to 1,000 KT in couple of years' time. So probably they are looking to unlock value. But in terms of approval, yes, we have to see that how the government reacts. As of now, there is no cash outflow to the VRL or nothing like that. The Zinc International they want to buy. So I don't think that the approval would be a difficult one in terms of Hindustan Zinc. Similarly, in Vedanta, they need 75% of the shareholders' approval by value. 63.7% is already with the promoter in Vedanta Limited. So out of the 37% minority shareholder, they would require roughly about 12% approval. So that is also seems to be easier take at this point of time.
So you believe the shareholders' approval could come through for both these two, Vikas, but I would be interested to see whether...
Limited, most likely.
Most
Vedanta
likely.
Limited, most likely.
And for Hindustan Zinc, we'll have to wait for the government of India.
Yeah, government, because minority shareholders are negligible, just 5%. So it all comes down to the government thought process.
I think the street will be interested to see whether or not they get the approval of the creditors, because that's going to be quite important. Vikas, final question before we let you go. You're in minority actually, because out of the brokerage reports that we're getting in there, I think your target price is one of the highest. As a house, what is the call you'll have on the stock, Vedanta Limited?
So we have a buy call simply because the stock has corrected since our last report. We haven't changed our target price from 290. It's just that the stock has corrected, so we have upgraded it to buy. We don't think further downside from the current levels and does not factor in the default from the Vedanta Resources at this point of time.
Okay, so not factoring in any possible default and one of the highest price targets on the street. Got that, Vikas. Thanks very much for weighing in. Let's see how the story unfolds. I'm sure we'll have more conversations on this in the coming days and weeks. But for now, a quick break. On the other side, we talk technicals. Mitesh Thakkar and Sudarshan Sukhani will join in.
Okay, welcome back. There's 8 minutes to go for the pre-open session. Mitesh Thakkar and Sudarshan Sukhani are with us with what they're making of things this morning. Gentlemen, good morning. Coming out of a long weekend, the GIFT Nifty is indicating a triple-digit cut. Mitesh, what would you do? Would you want to get in at the open, sort of test the waters with small longs, or wait it out?
Morning, Prashant. See, I think on Friday, I was of the opinion that till we cross 19,750, will not go long on the index. I think that level was respected. We got a high of 19,726. And the last hourly candle was a very long red bar on the Nifty, and which I think is likely to be followed by a gap down today. So I'm in no hurry to attempt longs. I'm looking at a level of around 19,450, 420. If there's some reversal from there, maybe then. But I think there's a good chance of us revisiting the earlier lows of 19,250, which is what we did in the end of August. So I think till we hit those levels, see some kind of consolidation and reversal, the initial feeling is that buying into a gap down, you might get some 50, 60 odd point kind of a bounce back. It will not be a positional strategy kind of a trade. So I think I'll avoid it very clearly.
Okay, so being a little cautious for the time being. Got that, Mitesh. Still, I'm just coming back to you. Sudarshan, good morning. How would you approach things given that the cues are fairly mixed?
Yeah, good morning. See, the Nifty is likely to break 19,600, and that's for the second time. That tells us that this support level is no longer being respected. I don't think I'm looking at any kind of buy on dips opportunity today. The trade is to step aside and let this market decide where it wants to go on the downside. Only when it starts building a base would a real opportunity come for the long side. Short selling in a correction is always fraught with danger, so I don't do that. Therefore, the trade is do nothing.
Okay, all right. On the index, do nothing. Then, Sudarshan, take note of your point. But what about individual stocks? What are the trades you have for us?
Yeah, Bajaj Auto is a buying opportunity. That stock had a very handsome rally, when very large bar. That was a big up move. It's consolidating after that. That's normal. But I think it should outperform. So it's a buy with a stop under 5,000. BHEL has a similar pattern. It had a big decline, but that decline stopped almost immediately. It's in a trading range. It could be preparatory to another up move. It's in an uptrend anyway. Buy with a stop under 127. I have LTTS as an intraday short. That's a short sell. It's making some kind of a distribution pattern. Sell with a stop above 46.60. And Voltas, which is already in a downtrending channel, is an intraday short with a stop above 870.
Okay, got that. Mitesh, hi, morning. Let's come to your stocks. What would you be doing today?
Morning, Survi. I have more of sell calls. Adani Enterprises, after a long time, features on the list of sell calls. Keep a stop at 24.60 here and a target of 2,300 or maybe mildly below that is what I would look for. Also, a sell on ICICI Bank. Now, we had sell calls on ICICI Bank last week as well, but now a fresh sell can be taken. Keep a stop at 965. Look for targets of around 920 on the downside. And a sell on Tech Mahindra, which after a good rally is now showing signs of a deeper pullback. So Tech Mahindra is a sell with a stop at 1240 for a target of around 1180. And one buy call on L&T Finance, which I would want to buy on a mildly lower level, so around 132, 131.5. Attempt along with a stop below 129.5 and a trading target of 138, 139 can be looked at.
Okay, all right, gentlemen, thanks very much for the calls. We will come back to you closer to market opening. Right now, I have to take a very quick break. Back with the pre-opening rates in just a bit. And also, Kapil Singh of Nomura will join in. We'll talk about the auto sales, the numbers we've seen so far for September. Well, almost rounding up at 9 a.m., so we'll start getting our pre-opening rates in just a minute. As we wait by for that, let's take in a couple more questions with Nischal as well. Nischal, we had business updates coming in from two banks over the weekend, Federal as well as IndusInd, and the numbers look good. I mean, on the growth side, loan growth of I think 4.5% for IndusInd Bank and almost 5% for Federal. Decent rise, single-digit rise in deposits as well. How do you view both of these stocks?
So, Surbi, I think it is as expected, basically. Credit growth has been strong and we are seeing that. The question is basically how much NIMS compression is going to happen. I think that is also most of the market expected. If it is more than what market is expecting, and I fear that, then you might see corrections continue to happen in the banks. But otherwise, I think on the top line growth, doesn't seem to be any concern for the moment. They are doing pretty well. So, as expected.
And if I could just ask you, Nishchal, what is your pecking order of preference? If I were to ask you about your top 3 bank stocks, which would they be? And would you throw in any tier 2 or mid-cap bank names there?
So the larger ones are quite obvious, as you know. Basically, we continue to prefer the private sector. So ICICI, HDFC in that order. And then then in the mid caps, we have a new name basically, which we are quite excited about at the moment, is RBL Bank. We are seeing continuously improvements happening. We have been now tracking it, soft tracking basically. We just initiated last quarter, but we have been soft tracking it for now almost 3 quarters. The management has been delivering whatever they have been talking. So we are quite positive, and our target price there is 330. So a decent upside from here.
Yeah, quite a big upside from these levels, Nishchal, and I think it's an anti-consensus call actually, but you're quite bullish out there. And it's worked quite well actually. Out of nowhere, the stocks recovered. Nishchal, what about Coal India? Valuation was cheap. Now there's talk of, maybe the world is underinvested in coal, and that's what could give some stability to Coal India's pricing. What's your view on the stock at around 295 rupees?
So at these prices, Nigel, I believe basically it's a hold for us. I think the stock has done very well. There has been good demand in the market basically, and we continue to believe that the prices, Coal India will keep on getting good prices, both in the auctions as well as the other prices anyway fixed. So on the auction side, we continue to believe they are going to keep on getting better prices. But at these valuations, I think more or less quite a lot is priced in. So at these prices, we have a hold on the stock.
Initial quick word on public sector banks, if you have a view. The month of September has been fantastic. PNB and Union Bank and Bank of India, we're talking between 25 and 30% moves in the last 1 month. What's your sense here?
So, Prashant, for the moment, we do not have any coverage on the public sector banks, basically, except for SBI, obviously. But we are now looking at more, and I think this is now looking more of a strategic upside rather than actually just being a more of a trading bet. So that's why we are evaluating again. And I think 2 banks we have sort of zeroed down. I think Bank of Baroda is one of them. Good ROA with a very decent pricing, so more than 1% ROA and closer to 1-time book. And the second one, which we are looking at, is quasi PSU is Karnataka Bank, around 1.4, 1.5% ROA and less than or closer to 1-time book. So I think these are the 2 banks basically we have sort of evaluating.
Nishchal, thanks very much. Good speaking with you. Appreciate you joining in with those specific names. I think the rupee is opened as well, and it's a weaker open as compared to the previous close. So it'll come up on your screen. I think at least 10 paise kind of weakness right at the word go with what's happening on the dollar index. So 0.25%, 83.2223. on the dollar rupee. Vivek is now joining in with what's on his momentumizer list this morning. Vivek, hi, good morning.
Well, good morning. A stock, that we don't discuss much often, from a space to, that we don't discuss too often, but a very interesting stock on the radar today as part of the momentumizer segment that we carry. The stock that we're talking about is Kirloskar Pneumatic. Now, this particular stock, just have a look at the price action. The stock has been quite strong. Even on Friday, the stock was up over 6% in the session, trading comfortably above the 50, 100 as well as the 200 DMA. And on Friday, the volume activity too in this particular stock was quite strong. What has been the important trigger? Ambit, has gone ahead and initiated coverage on the stock. They've given a buy rating on the stock. They have a target price of over 900 rupees a share, significant upside from the current market price. What they're saying is that the company should be seen as a play on the refrigeration as well as gas compressors as well as packages outlook that they are seeing to be quite strong at this point of time. Along with that, the company is also adding new products to go ahead and address gaps in their product portfolio versus their MNC peers. Along with that, benefits from cost leadership that the company enjoys in terms of in-house foundry, manufacturing, engineering and design too is important as far as Ambit is concerned. They believe exports too will start contributing significantly. Exports are now 12 to 14% of the total revenue mix versus just around 3% earlier. And lastly, talking about valuations, at less than 20 times, FY25 price to earnings, the stock is the cheapest in the industrial universe despite the strong growth outlook that the company enjoys according to Ambit.
Okay, got that. Interesting one. Vivek, thanks very much for the details momentumizer of the morning. By the way, rates have started kicking in, and the first glance on Vedanta suggests a 4% pop. Now, let's see, this is pre-open. We have to wait for the actual opening. It started with a 7% gap up. Now it's about 5% higher. Let's see how this plays out. So that's one reaction coming through. The other trend is that auto stocks look like they want to start off positive. Not sure if that plays out or not. Remember, M&M's SUV sales have been completely scorching once again in September. That's the nifty winner right now in the pre-open session. Next one is Maruti with a gain of about 1%. Though for Maruti, sales have been a little more muted. Since we're on the subject already, let's actually tell you more. The growth was in single digits in the month gone by. In September, it was below some of the estimates, like the Nomura estimates on the street. However, Maruti's half-yearly sales did top 1 million units for the first time ever. We caught up with Shashank Srivastava, Senior Executive Officer, Marketing and Sales at Maruti Suzuki. Listen in to some of the sales trends and the outlook that he shared with us.
This year, and this, by the way, is not only the highest ever September, but the highest ever wholesale in any month in any year in the industry. So by absolute volume terms, I think it's been a great month for the industry, as also for Maruti. Maruti growing at double the rate at which competition is growing. As a result, our market share has gone up in H1 by almost 1.2%, and from the 41% it was earlier, it's crossed the 42.3% mark. So in that sense, it's been a good H1 for Maruti. Of course, if only we could see a larger number coming through the entry hatches, then we could probably see a much better growth figure for Maruti Suzuki. I would expect that we should cross the last year's number, which was 259,000 for the full year, which was also, by the way, the highest ever exports of Maruti Suzuki. So that number still looks that we will breach that number for the year.
All right. Let's get into further analysis on that. We have with us Kapil Singh, the head consumer and digital commerce auto equity research at Nomura, joins us on the show. Hi, Kapil. Good morning. Thanks so much for joining in. What do you make of the auto sales numbers, and which was the big beat and the biggest disappointment as well?
Sure. Good morning, and thank you for having me on the show. So for this month, the big beat for us were from TVS and also from Mahindra & Mahindra SUV segment. I think these two companies did surprise us quite a bit. Also, Tata Motors, the MHCV sales were pretty strong, close to 30% growth. And I would say that all of these three surprised us.
Okay. By the way, we're getting Bajaj Auto numbers as well. They're in line, more or less in line with Nomura estimates. Slight dip coming in. Total sales down 1% over the same period last year. That was expected, so it's not really a shocker. Very muted trends. Three-wheelers doing really well for Bajaj Auto. Two-wheelers kind of just moving along. Kapil, let's actually talk two-wheelers because there's so much happening in that market, right? We've seen a lot of key launches at the premium end. And the other narrative is whether rural will start recovering. Hero's sales were above most of the estimates from what I remember. So within autos, how do you view two-wheelers right now? And which would be your preferred sort of companies or stocks?
Yeah, so within the two-wheeler space, we prefer Bajaj Auto and TVS Motors. I think these are companies which are growing above the industry growth rates consistently for last few months, and they have come up with new products which have already started to gain traction. So Bajaj with the Triumph and TVS also, if you see, some of the new products have done very well, which has helped them grow ahead of the market. As far as overall industry is concerned, it is still, I would say, more driven by the 125cc and above. We are seeing weakness across the lower end segments, both in two-wheelers and in four-wheelers. So passenger vehicles also, same kind of trends are observed. I would say we should expect some recovery here if the inflation remains under control and the consumers' incomes do catch up over time. But they also reflect an important element of consumer preferences, where consumers in India are willing to pay more for features and better technology, which is positive, I would say, for the industry, because even if the volume growth is in single digits, the revenue growth can be in double digits for most of these companies.
Okay. Kapil, hi, good morning. Bajaj numbers, as Surabhi was saying, are just coming through. And one thing which stands out is, so TVS export growth was strong. I think there was some 6-7% growth, or maybe even more than that, but it was better. In the case of Bajaj, exports are down 1%. So that's just coming through on Bajaj. And you said you like, amongst two-wheelers, you like Bajaj. Any thoughts on the exports part?
I don't have the exact numbers, but I believe they will not be too different from what we were expecting. So, look, the export recovery is going to take some time. We are not expecting a sudden recovery in exports because we've had currency issues and economic issues in many of the export markets. And as these settle down, I think most of the Indian companies have done a phenomenal job over the last few years. And as the new products are also introduced into the markets, all of these factors will lead to a recovery. So every quarter, we are seeing an improvement in volume trends. And I expect that to continue through the next year. And we will probably start seeing growth by the time we reach the end of this year. So that is pretty much in line with expectations. I don't see that as a matter of concern, even if exports are down slightly. At the same time, I think the domestic numbers are probably better than expectations. There is some channel buildup happening at this point of time for the festive season. And as you know, we do expect the festive season to be good this year, both for two-wheelers and four-wheelers. I think the key reason is, particularly in case of four-wheelers, is there was not enough inventory available for last 2 years, particularly of the models which are in demand. And this year we are seeing better inventory. So that is definitely positive.
Okay, Kapil, exactly on that, before we wind up, give us your sense on four-wheelers. Like you're saying, I think this trend of the premium end doing really well, that is well documented, and it's cutting across sectors, whether you're looking at hotels or retail or autos. Now the question is how to play it. Should you stick with an M&M, which has been rock steady with its SUV portfolio? Should you look at Maruti, because incrementally it's all about the Jimny and the Fronx and all these new sort of crossover cars that they're launching in the market? Or should you go back to Tata Motors, which is then a far more complicated piece? You're not just, playing EV or the Nexon anymore over there. That's a much bigger global portfolio. So out of these three stocks, where the four-wheeler play comes in, what would be your preferred picks for the next, say, 12 months?
Our preferred picks are M&M and Tata Motors. And the reason is, as you rightly said, one is the mix shift towards SUVs and a higher growth. Of course, for Tata Motors, there is a play on JLR involved here as well, where company is looking to move towards more premium end of the portfolio as they move forward. So those are our preferred picks for that reason. Yeah.
Okay. All right, Kapil, we'll leave it on that note. Thank you very much for joining in today with a view on auto sales. Okay, the pre-open is settling in just about 15 points lower. Mitesh is with us. Mitesh, quick thoughts and final advice, trades that you'll start with?
I think going short into Adani Enterprises may be a good trade if it doesn't open too much of a gap down. And look for a target of 2,300 and place your stop losses just about 2460.
Okay, all right. Got that, Mitesh. Just bear with us, a couple of seconds to go. And what we're seeing is that it could be a very flat opening. I want to see what's happening with the tech, because IT was selling off. That was one of the trends of last week, that you were taking profits ahead of the event, which is earnings coming through. Let's see how that plays out.
At the start of the October series, we made this point that till year to date, IT has outperformed the Nifty Bank. Will Q4 be a phase where you see that turnaround? Because IT numbers are not going to be inspiring. The yields are higher. And banks fundamentally are better placed as well. So let's see how that plays out. For the time being, we're getting the initial rates that are coming in there. And it's a little bit more tricky for the bulls. You'd have liked actually a 100-point downtick because then it opens up in that slot of around 19,500 odd. The cut we're getting is only around 40-50 points. Now it's getting a little deeper. Now you're getting an 80-point downtick, which, from a bullish perspective, it's not such a bad thing. You'd like to see the market starting off closer to around the support zone. And then if you're brave enough, maybe you go ahead and buy that. But otherwise, global cues are muddled. So please take note of that. Stocks that are losing out. Eicher Motors is down close to around 2.5%. Crude oil prices have corrected by close to around 4.5-5% overnight. ONGC is down close to around 2.5%. Hindalco as well opening up with a cut of around 2%. And Maruti, the numbers, well, if you look at it, it's fairly tepid. So that's why that one as well opening up with a cut. Auto sales numbers continue to take center stage. You have Mahindra and Mahindra. That's up close to around 1%. Those numbers look pretty good. From the broader markets, just one stock I wanted to focus on. The street likes what Vedanta has done from now. It's a stopgap arrangement for now, because they are able to move ahead if they want to go ahead and sell one asset if the demerger gets approval. So for the time being, after the 6% bump up that we saw in Friday's trading session, you're driving the stock up close to around 4%. Let's see whether or not it holds on to these gains. But clearly the street for the time being, well, they're giving it some bit of a chance out there. And maybe there are a lot of shorts in the system as well, which could be getting squeezed out a little bit. What else, Harvey?
Okay, ONGC is cooling off. Oil prices have cooled off 5%. ONGC has had a nice trading play over the last couple of days. So there's some money coming off over there. Then some of the other big names that have started weak, Reliance, not really supporting the bulls case. Neither are banks, actually. Overall, banks are down. Kotak, HDFC Bank, all of these names starting off on the lower side. ITC is lower as well in terms of the big boys. So Nifty not really finding support. TCS not working. Most of these IT names, Infosys not working. So it's a weak start, 100 down. Let's see what's happening in the broader markets. In terms of stocks in focus, we had good numbers from TVS Motors, probably was the best of the lot in terms of auto sales. You're not seeing much, just about a 0.5% increase coming in there. Good business update from Federal Bank, about 1% higher over there. So those are the newsmakers. Otherwise, even in the mid-cap market, there is a fair amount of caution. RVNL announced more order wins, 3% up on that stock. NMDC Steel, not NMDC, but NMDC Steel is starting slightly positive as well. Otherwise, it's fairly quiet, you'd have to say, in the mid-cap market. RBL Bank, a stock that Nishchal likes a lot, he was just speaking about it, slightly lower. So, Prashant, I think for what we can say safely is that people are taking their time, coming back, digesting all the news flow. Starting 100 down, the question is, will the buyers come in and when they come in?
Yeah, no, I think absolutely. So, give it time and let the market tell you, prices tell you what they want to do because there's too much going on. The level to watch would be 19,492, which we put out in the morning, which is nothing but Thursday's low. And it'll be interesting to see if we're able to hold on to that level. Basically, in 19,500, we are closer to 19,500 than we are to 19,600 now. That's the Nifty. Let's just look at the Nifty Bank as well, which had a positive close, which starts down 0.5% today. So on the Bank Nifty, we are once again slightly below the 78% retracement of the August low to the September high. This got taken out on the upside on Friday, but with today's 0.5% lower start, we are back under it. Vedanta has given up 3% from the day's high, but again, like the market, Vedanta will also take time to find its footing. So up, gap up of 4%, up 1.5%. Let's see. RVNL is up 3.25%. So it's the second largest volume traded name. Marico is coming up with about a 3% gain, 578 on Marico. Ease My Trip is coming up with 2.33% gain. There is Mahanagar Gas, which comes up. It's got a 3.33% gain right now. And suddenly, volume suddenly drop off. So after the list that I mentioned, there's Heidelberg, which is up 4%. Heidelberg is at about 186 this morning. Safari, which is the luggage maker, 5% on Safari, 4,100 plus on that one. Shakti Pumps is coming up with about a 2.5%, but volumes then start to thin out. There are more names, but we'll kind of wait to put these out. But that's what's coming up on the broader market with stuff which is doing well. On the downside, the big volume activity, MCX should come up. MCX is down 1.33%. A lot of drama over the last 2 or 3 days on MCX. Although, the setback came through, I think, on Thursday post-market hours. Friday, the stock sold off and then recovered. It was not a very sort of negative close or anything on Friday. It's down 2% this morning. Eicher Motors is down 2 3/4, and Bandhan Bank is down 2% as well. ONGC, Hindalco, Varun Beverages, Oro Pharma. Suddenly, volumes are opening up on the downside on lots of these names, which was not the case when we started. Supreme Industries, another big outperformer, is starting with a 2% cut. Stocks at about 4,040 or so. So triple-digit cut, 100 points of 19,532 on the Nifty. Andrew Holland is Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. Andrew, good to have you with us here. Thank you very much. Is there more downside, or do you think downsides are limited with upsides also kind of capped for now? What's your sense?
I certainly think the upside is capped at the moment because, again, when we spoke last time, I said it's quite messy out there globally. You got the yen at 150, you got the hawkish Fed speakers still saying that there could be one more rate increase. So the story goes on. So that that Goldilocks scenario that everyone's been hoping for kind of starts to wane into the background now as some of these problems persist. And are not going away. So for our markets, we got the oil price has cooled off from where it was, but I still think because of that, the RBI, when it has its monetary policy this week, is going to be more hawkish. They might try and smooth it out, but they'll be hawkish because of inflation, and the rupee, as you can see, is also kind of weakening. Along with other emerging market currencies. So, the overall kind of outside of India is not looking great. And I think that's weighing on investors' minds, particularly for foreign investors, where they're seeing, obviously a good outperformance from India. It is the most loved market at the moment, and maybe just taking some of that some of those gains off the table from an overbought situation where we are. So, I think we're in that range between, I don't know, it's a wide range, I think, probably towards those lows of 19,000 and the highs of 20,000. And I think we're stuck there for a little while now. Maybe the catalyst next will be if some of the local elections are, more favourable, or as we go into next year as the general elections and optimism towards that starts to pick up in terms of momentum for the Indian index.
Mm-hmm. Andrew, hi, good morning. So to be here, since you brought up elections, let me ask you about that. Would you look at any sort of a play over the next 4 or 5 months till we get into election season full throttle? And if yes, what would that play be? More of the same? CapEx? So we got the CapEx numbers for the April to August period along with the fiscal deficit data on Friday. And it's really roaring away. The numbers are speaking, right? So would you continue to be in areas like, I don't know, defense, railways, wherever all this money is coming in? Or maybe would you look at consumer? Because the anticipation is that the government should start loosening up its purse strings, and that should help that part of the market as well, getting closer to the event. What would you advise?
It's also, it's very difficult to say what the government might do ahead of any election. So I'm not really playing into that theme of consumption because of elections, and haven't done over the years either. I think, what I was going to say is that the government capex, along with the private capex, will have that multiplier effect, and that's what's going to be the earnings momentum and the rising kind of earnings upgrades over the next 6 months to 9 months as you kind of head towards the elections as well. So I think that's the play I would have in terms of the overall India market. And whilst that target of 20,000 Nifty still remains for me for March, I think you'll see a gradual rise, maybe past that as we head towards the elections, but also because of the earnings upgrades, I think you'll start seeing in the second half from say now onwards into March of next year. So the themes that you've talked about in terms of infrastructure and railways and defence have been themes we've been talking about for some time. So they don't go away. They're still going to have money spent on them. I think some of the some of the companies have seen a rapid rise in their share prices. And again, if you go back to that kind of 2004, 2007 period, I think you'll find that most share prices rose on the back of order wins rather than execution thereafter. So that's probably the play you could continue to see in the infra stocks.
Hi, Andrew. Good morning. Andrew, what about the IT stocks? In the next few days, we're going to be getting the IT numbers that will be coming out. And I don't think the street is expecting anything, out of the box or any big positive surprise. That index and stocks out there have done really well. How are you positioned on the IT theme in particular?
No, I mean, I think with the IT theme, it's really a matter of what the commentary is. And again, we're getting mixed views on that. Accenture, I think, kind of highlighted some of the problems that are still out there. And I think there's a hope value that it's all okay and things will start moving ahead. And I think that was based more on what was happening in AI and a kind of pickup in the NASDAQ and those related stocks, rather than it's anything to do with the environment out there. So I'm not convinced that the IT sector is out of its problems yet. And we might see some more downgrades to earnings. That would probably be the time I'd be looking more seriously at the IT sector. But at this moment, I don't think there's any need to rush into it. It's defensive if you want to be defensive in a market which might be falling over the next few weeks. But otherwise, it's not going to give you that growth that you really want. It's not going to be a driver of the Indian index, that's for sure.
Okay, got that point. Andrew, let's talk banks. This has been one underperforming sector. So far, there's been the whole big bank rally has been missing. And maybe that also ties in with the fact that FIIs have not really driven this rally. It's been more driven by domestic money. In fact, last month, FPIs were net sellers in Indian cash equities. What's the prognosis as we look at the next couple of months? Do you see a catch-up play over here? And if so, how would you look at it? Because PSU banks still have had a fantastic trading month, but the larger names, they've been fairly range-bound. What would you reckon could be the way forward?
So I think, as we come into the results season, there's two sectors which I think the market are going to focus in on. And one is IT, which you just talked about, and second is the banks. And I think the key is what the commentary will be about NIMs. Since HDFC and the brokers' reports about HDFC being more negative, I think there's a question mark now over, yes, you're seeing, good growth, but it is at the expense of margins as well. And I think that's what the market will be looking at in terms of, can there be a next leg for the banking index? If there's any disappointment at all, then I think you'll see, the follow through in terms of more selling in the sector. But for the time being, I think the jury's out. So we'll wait and see what some of these banks say. But, when a sector should be doing well and all of the factors are there, for it to be underperforming is telling you something that there's something that we're missing at the moment. And maybe it's all about NIMs.
All right, Andrew, but since you mentioned HDFC Bank, what's your view on HDFC Bank? The street is divided out there. One part believes it's the most juicy valuations that you've seen in the last few years, so you must get in. The other part of the street says no, for the next year or so, they're going to find it very difficult to grow on this large base. Return ratios are getting diluted and NIMs as well are not looking up. So they said you'll have plenty of time for the next 12 to 18 months if you want to get in. What is your view on this bank?
Yeah, and so I think you could say that about all banks then, right? I mean, in terms of the NIM story, is it going to be a pressure for all banks? Is the inclusion of Geo into the financial world going to change things around again? So I think these are kind of question marks which are there. I don't think at the moment I'd be saying that any one bank is standing out. And so therefore, whether it's a juicy valuation or not, I think you can wait. I think let's wait for the results season, because I think that will tell us a lot more of what we need to do in this sector. Because, as I said, it should be outperforming. The economy is doing well. The bank's loan growth is doing well. But there's something that's holding back the banking sector. So I think that the story will be unfolding as the results come out.
Okay. Andrew, finally, let's talk about maybe, what do we call it, the elephant in the room or something else. There's 4.7% on the US 10-year yield, 107 on the dollar index. Till now, it's not hurt equities in too bad a fashion. I mean, US markets were down 4.5% in September. Our markets have, just been range-bound, flattish. So we've not really seen a big correction. But is that something that is still on the table, according to you?
Yeah, I mean, it worries me more and more with the factors which are out there, which are negative, whether it's from China to the yen, to higher rates or yields in the US, and the problem still, dogging Europe. At some point, it will come to a head, and I just think that the problems. Let's just take the US for example. I think. Consumers now have to, or the kids have to start paying their school fees or school loans for the first time. So that's going to eat into the discretionary spending there. And then you've got, commercial real estate is reeling a little bit under the higher interest rates, and you see a lot of empty spaces there. And the regional banks still have these problems at higher yields. Their problems don't go away. It's just masked by the fact that the Federal Reserve is helping them out. So all of this leads me to, if something cracks in any of these areas, the market's not ready for it. And there's no shorts in the market to really kind of help you. So the fall could be quite quick. And I think, I'm not saying it's going to happen straight away, but the more we hold on to these levels with no kind of retracement, the more risky the market becomes because of these factors. The Goldilocks scenario is really not playing out. And I think the markets, we've seen, you said 4% in September, but it's 7% from the high that we saw, maybe in August. So you'd already seen some retracement, a big retracement. It's been slowly and a little bit more painful, maybe, there were a one-off kind of fall. But the 1% falls in the US market are becoming more, more noticeable over the past month and a half.
Okay, all right, Andrew, thanks so much for stopping by and filling us in with details on how do you see the market as well as individual sectors that we just discussed. Let's move on to the auto space then. Bajaj Auto, we just saw the numbers flash on the screen. The numbers are more or less flattish for the past month. Domestic sales and exports, they were marginally lower. Two-wheeler sales, well, they saw a 6% dip. To discuss this, how is demand trending ahead of the festive season? Mr. Rakesh Sharma, the Executive Director at Bajaj Auto, joins us on the show. Hi, Mr. Sharma, good morning, and thanks so much for joining in. Well, give us a few details, particularly in the export market. I recall earlier this year when we were talking, we were struggling in that vicinity of around 110 to 120,000. Last few months, though, it stabilized at around 140,000. How is the exports market looking? Do you expect to scale up further from here on? Point number one. And also, since we're talking about exports, how is the Nigeria sales volumes? I think they were hovering around the 25,000-30,000 odd. What's the last number?
Good morning. Yes, the export story is one of slow recovery, and we were also not expecting a rapid recovery. It's more like limping back to normalcy. Like Q1 was, about 128,000 average per month for us, and Q2 is 10% better than at 140. I think that in the subsequent quarters, we will see a similar pace of recovery, give or take a few percent points, because that's the nature of the problem and how the individual economies are mitigating the effects of inflation. It is sort of playing out slowly, but we are happy that things have bottomed out and looking up slightly. And of course, a big contributor in this is Nigeria. And the story is similar in Nigeria, though Nigeria is still ravaged by a lot of devaluation, some uncertainty. They took some very good long-term policy measures, but which have caused a lot of pain in everyday life. And therefore, there has been a little bit of a holdback from serious enforcement of these measures. So that's why we again see, some dichotomy between the official exchange rate and the street exchange rate. which is again causing a little bit of inflation. But even after all that, retails in Nigeria crossed 30,000 units for us last month. So that was good. So some improvements over there too.
Mr. Sharma, hi, good morning. I don't know if this is correct to compare, but since the monthly numbers are released by all automakers, I was looking at TVS's export numbers. They've seen a very sharp ramp up. I think on a year-on-year basis, it's an 8% increase. On a month-on-month basis, it's a 15% increase. Could you kind of put your numbers in context with what we're seeing from a competitor? Are these different markets, etc., we're looking at, so not comparable? I mean, any thoughts?
Well, obviously, I can't talk about their numbers because I'm not privy to details of how what has been achieved in September by them. But, we tend to look at retails and we are looking at month-on-month improvement and we are looking at, our share. And that is intact, inching up slightly. In fact, I would say that the Chinese have, in the last few months, on the back of very cheap products, which have sort of made a comeback in these difficult times, they have put a constraint on growth in our market share. And the other point is that these export numbers in a particular month, they sort of reflect more the individual positions of stocks and channel stocks and what kind of an approach one would like to keep on the channel stocks. Our approach has been to minimize exposure because we have savagely cut stocks on the ground, both with the dealers over there and the distributors, because we don't want this whole channel system to weaken or to be facing this uncertainty of the exchange rates, So it depends on what kind of an approach you take. Another very tenable is to sort of push the exports if you're sure of the devaluation occurring in the countries and just sit on it and, the product that way becomes cheaper. But our approach has been to sort of match exports and retails and minimize inventory exposure.
Mr. Sharma, hi, good morning. I thought my colleagues had covered exports and I'll move on to domestic, but then you brought in the Chinese word over there. So allow me to ask you this. I mean, can you elaborate a little more on that trend? Which are the markets in, which of your export markets do you see a lot of competition now coming in from China? And do you see this as transitory or could this now have some sort of an impact? I mean, how severe is the pricing competition there? And what does that mean for the business over the next few months?
Well, the Chinese story is not a new one. I mean, we have wrested, the Indian manufacturers have wrested the market share from essentially the Chinese because the Chinese were very, very dominant players in Latin America and Africa, the entire African continent. And this sort of, what happens is when the backdrop changes, then, the competitive positions also become slightly different. And what I was saying is that what we have noticed in the last few months is because the individual economies and the customers have gone through such hardship because of inflation, devaluation-led inflation, that it becomes that much more difficult for them to step up to our proposition, which is, much better value for money, much more reliable product, better products for which you pay a certain premium. And at least in these segments, in Africa and Latin America, and the entry segments, the Chinese companies who participate there are generally smaller companies, and they really bat purely price. So when the backdrop
so it's not
difficult.
Got it. So it's not an unusually new threat. It's something you've lived with before. I think that's the point you're making, right?
Absolutely.
Okay, got that.
Absolutely. Yeah.
Got that. So let me now just shift focus to the domestic market. And here, if I look at domestic two-wheelers, then over September 22 to September 23, there's a 9% dip. I'm only talking two-wheelers. And I think that's something that people will want to know a little more about. Is that just because of seasonality, because of, I don't know if the festive season, though September is not really, festive month even last year. What would you attribute this to? And what's the outlook on domestic sales as we get into the season this year?
Yeah, the 9% dip which you are referring to is for the month, and that is for the billing. And if I just jog your memory, last year we had a severe supply chain issue. And by August, September, we were just coming out of it because of the semiconductors, etc. We had been, in particular, very badly hit. And the whole scramble last year in August and September, with an earlier season than this year, was to fill up the channel pipeline so that in the crucial periods of the season, which was a bit early, the festive season, we did not lose out because of non-availability of stock on the ground. And that's why those numbers of August and September were very high. And this year is more normal. In any case, the right way to look at it is retails. And the best source of information is Vahan. And if you look at Vahan retails, we are, growing very, very strongly, particularly in our area of focus, which is the top half of the industry. And to give you some numbers, which you can check in Vahan, the industry has grown at 15%, and we've clocked 45%. So we've grown at thrice the rate of industry in the top half of which is the 125cc plus segment, where we play the 125 to 250cc kind of a segment. So it's going great guns in that area for us. And the stock numbers, they will normalize once the season the dust is settled after the season.
Okay. All right, Mr. Sharma, we'll leave it there for this morning. Thanks very much. Look forward to our conversations as the festive season kicks in. Let's see how trends play up. That's Bajaj Auto. Stocks recovering from the lows of the morning. We have to take a very quick break on that note. On the other side, Naresh Jalan of Ramakrishna Forgings joins in. Talk about the company's fundraising plan. The board has approved raising up to 1,000 crores via a QIP. And then just a reminder, in a bit from now, we also get into our special segment, Charting Trends. Rahul Sharma of JM Financial Services talks technicals today. Welcome back. You're with us on Corporate Radar. Let's move on and talk about the next stock that's on our radar. And that is Ramakrishna Forgings. The company is looking to raise up to 1,000 crore rupees via a QIP. The board has given its approval for conversion of 46 lakh warrants into equity shares as well. Do note that the stock is up over 200% in the last 1 year, so it's been quite the mover. To talk about all the plans ahead, we have Naresh Jalan, Managing Director of Ramakrishna Forgings, with us now. Mr. Jalan, thanks for joining in. So first things first, 1,000 crores via a QIP. What's the timeline that you're looking at, and why do you want to raise this amount of equity?
Good morning. I think right now we have just taken an enabling resolution. So I think we don't have a timeline. It's valid for 365 days. So basically we have taken this resolution looking into the market and the availability of because of a lot of consolidation happening in the forging industry. So we feel that there are a lot of opportunities which we are facing with. And if there is a right opportunity and right segment where we can spend money, so that's the reason we have taken this enabling resolution. So we can go to the capital markets and get funds in case of any new opportunities which arise with us.
So, Mr. Jalan, since you're already looking at shoring up the purse, I'm guessing there's something interesting on the radar that you've already noticed in terms of acquisition?
No, I don't. Nothing is there in the pipeline yet, but we are regularly getting a lot of opportunities, I think, both organic and inorganic both. So I think as a prudent management, we think that we should be ready with the purse. Whenever there is an opportunity, we can go ahead and do the deal.
Mr. Jalan, whose purse is feeling very, very good will be your shareholders, because you have delivered and delivered in style. The stock, has re-rated big time in the last 12 months. So good for your shareholders. But what you do from here on is going to be important. So give us some clarification. You're talking about inorganic growth, organic growth, and there's a third aspect, which is debt. So if you happen to go ahead with this QIP, how will you split it up between utilization of the funds? Will it be purely for organic or inorganic growth? Or is there a possibility that you look to reduce debt?
No, I think we have, as we have reiterated in our earlier calls and conversations, that we would like to have, we don't want to be a zero debt company. We can live with small debt. Debt to EBITDA as planned is 1:1 or below 1. So I think right now, in course of business, whatever we are doing, I think within a year or so, we will be below that. So obviously, this purse right now will be utilized, obviously, to pay off the debt. But we will be ready with this cash for organic and inorganic growth, both as an opportunity arises.
Mr. Jalan, I think you'd said that debt should be down to between 150 odd crores by the end of the year. That's the plan?
Yes, that's the plan.
Okay. Now, you were also in the process of raising capacity to 2.4 lakh tons by the end of September. We're talking
We
to
are on
you.
track. I think by this year
sorry.
end, by FY24 end, we should be close to 260,000 tons of available capacity.
What's the capacity now?
It's close to 230,000 tons, and I think by the end of the year, it should be 260.
Okay. You told us that the out of the capacity, but I think the numbers are now different. So what would you sell in terms of volumes this year in FY24?
I think vis-a-vis whatever last year we did, we are looking at a volume, as we guided earlier, we are looking at a 15 to 20% volume growth for the full year from the organic. And whatever we have acquired, I think that's going to take shape in the last quarter of this year. So we'll still have some time before we can commit on the acquisitions which we have done. So what volumes can come out of that?
Mr. Jalan, earlier you had told us that the share of the non-auto business for Ramakrishna Forgings, that will keep growing. And I think you had given a guidance that it will move up to 30% of your business. Now, I just want to understand what's happening here, because you also have a tie-up with Titagarh Rail on, I think, over 15 lakh forged wheels that you have to deliver for the railways. That's a long contract, right? It's a 20-year contract. So is that included in this guidance that you gave? If you could just throw some more light on the non-auto business and what's the scale-up plan? And also what that means in terms of margins.
Non-auto business itself is doing extremely well for standalone RKFL. And RKFL Titagarh JV business is nowhere linked to this 30-70 ratio, which we are talking about, 70% auto and 30% non-auto. 30% non-auto will be RKFL on a standalone basis will be able to achieve by next year. And we are on track of it. You will be able to see in the next three results, half-year results, as well as the next two results which are going to come out. We are scaling the non-auto operations exceptionally well. And we are on track to achieve that. And Titagarh Railway JV is going to come in place by 26 first half. So I think it's still a long time to go before that comes into place.
Okay, got that. So since in any case, I mean, on your own, Ramakrishna is going to move towards 30% non-auto, what does that mean for margins? I'm just trying to understand between both the segments, if there is a margin differential, a sizable one.
No, I think in overall context of RKFL on standalone basis, we are on an aspirational basis, we are looking at least 100 to 150 basis points improvement in margins in the next 2 years' time. That is the aspiration we are working with. I think while we sustain the current levels of margin, we aspire to improve the margins by 100 to 150 basis points in next 2 years.
Okay, all right. Mr. Jalan, we'll leave it there. Good speaking with you, sir. Thank you very much for your time. And it's a pleasure. Good luck. Well, that's Ramakrishna Forging. Stock's done very, very well over the last quarter, and expectations are running high. Well, you got the market, which is down 124 points, so closer and closer to the 19,500 level, and that's the picture so far. So it's been not too much. I mean, it's been, 30 minutes or so since open. RVNL, Max Healthcare is a new one which has come into the mix. The stock's up about 3.5%, 586 or so. Senco, we've been talking about this recent listing, and it's having a move now. So, I think It's done well. Last week was a big one for Senco, and it's starting this week with a 6% gain. Jyoti Laboratories is another one, which is up 5%, 377 on Jyoti Laboratories. Safari is up a little bit more. Quick Heal, I think, was a big mover Thursday and Friday. So, yeah, I mean, there are new Metro Brands was not there in the morning in the mix. It's up about 4% right now as we speak. But the big story, of course, is Vedanta, which has announced a big restructuring plan. The management has also said that a demerger into separate entities will help them simplify their corporate structure and give investors the choice of the commodity that they want to invest in. Nigel has moved over to the wall with more details on this story. Nigel.
Well, that's right. We'll have many more Vedanta listed entities, and investors will be hoping more is actually merrier. But in the past decade, they have merged entities and they have flirted with the idea of having different listed entities in November 2021. But that didn't go through. However, this time around, they have announced that the shareholders of Vedanta Limited will get shares in 5 newly listed entities with focus on their core competencies. Vedanta Limited will hold 65% stake in Hindustan Zinc, its upcoming semiconductor unit, as well as the display businesses, and also the stainless steel business. Vedanta Aluminium will house its aluminium business, including the 51% stake that they have in Balco, while Vedanta Oil and Gas will house Kane India. Their copper and their zinc international businesses, well, they'll be listed under Vedanta Base Metals. Vedanta Steel and Ferrous Materials will have its domestic iron ore business, the Liberia assets, as well as the ESL steel asset. And finally, you'll have the power asset. That'll constitute all their power assets. Well, bulk of the FY23 EBITDA came in from Hindustan Zinc. That'll be housed under Vedanta Limited. That's followed by oil and gas as well as the aluminium business in terms of an EBITDA contribution. The management says that the demerger will simplify their corporate structure, give investors the choice of commodity they want to invest in, and also provides a platform for the individual units to pursue the strategic agendas. Now, you need to keep in mind, when they merged their entities, they had given a similar rationale. Well, the demerger will require approvals from the board, the stock exchanges, and the NCLT, and the management has indicated that they expect it to be completed within 12 to around 15 months. The Vedanta Group, well, they get the flexibility to unlock value for investors by liquidating a particular asset or bringing in a strategic investor. And in the current structure, there would be double taxation. One would be on this profit on sale of an asset, and the second would be on the dividend payout. While post the demerger, well, the promoters will only have to pay long-term capital gains. The problem, though, is Vedanta Resources debt issue that remains unresolved. They still have payments of more than $4 billion from now till FY25. And the promoter entity Vedanta Resources, they broadly have 3 tools, which includes dividends that they receive from Hindustan Zinc and Vedanta Limited, money they get from the stake sale that they've already done in Vedanta Limited, and also the brand fees that they get from the Indian listed entities. But now they're running out of options. This is because Hindustan Zinc, well, their cash balance is exhausted. Interest rates have increased with the downgrades by credit rating agencies. And post increasing stake in Vedanta Limited by 20%, Vedanta Resources, well, they've gone ahead and they've sold close to around 6% stake in the company, which has made the street a little bit more nervous. Well, on brokerages, Investec, they have a sell rating. They highlight that the company has carbon-heavy assets, and they're skeptical with regard to the cash flow burn in the new ventures. CLSA, they've upgraded the stock to outperform, but they lowered their target price to 230. They believe that the sustained re-rating focus will be only once the focus shifts to the operating improvement. Nuvama, they have upgraded Vedanta Limited to hold, as they believe the demerger is a step in the right direction, though they've left their target price unchanged. And Phillip Capital, they have a buy rating with a target price of 290 rupees. They don't expect any meaningful downside in the stock from current levels. So for the time being, the deal has given them some breathing space, but we'll need to see how Vedanta Resources deals with that debt issue that they have in the upcoming maturity payments in the next 18 months or so. Back to you.
Okay, got that. Nigel, thank you very much. Stock for the time being is holding on to a gain of about just 2%, 2.25% to be precise. By the way, the market overall is looking very tentative because the market now, the Nifty is trading below levels where it closed out on Thursday. Thursday was a big gap down candle. It's already below Thursday's close. It's very quickly heading towards the intraday low that we saw on Thursday. That was just under 19,500. And that's precisely where we are right now. A lot of additional selling on ONGC. Just put up some of these stocks. Coal India, ONGC, Maruti, Hero. These are stocks that are struggling with some additional selling now coming through. Good time to kickstart our special segment, Charting Trends. Rahul Sharma, Director and Head of Technical and Derivative Research at JM Financial, is with us. Rahul, good morning. Thanks for joining in. So I guess the market is at a very precarious position, right? On the fundamental side, we've all been talking about higher yields, what the dollar is doing. So, let's get that backdrop going first. The way some of these global asset classes are shaping up, and our Nifty that's been really trying to hold on to 19,500. What do you make of things, and do you think this can hold, this zone?
Yeah, so there are three things to keep an eye on. One is the relative positioning so far we've had with respect to the US markets. US markets are trading below their 200-day moving average, the key indices, whereas Nifty is still hovering around the 50-day moving average. So on a relative scale, we've performed better. Now, if the situation deteriorates from here, we could get into a time correction. Time correction would mean we spent more time. The moves are not as big as we've seen in the last few weeks. And at the same time, it's a downward spiral. Now, second thing is the broader market has not given up yet. So we are seeing the mid-cap index, the small-cap index, the NSE 500 index doing relatively better. 9 out of 10 times in the past, every time the broader market has not given up. And once the global volatility has settled, we've seen the markets come back with a bang. So I think it's a matter of time that once the global markets see some recovery, we also see. But before that, I think there is a bit of a pain in terms of a time correction. And thirdly, at 6-month highs, we are seeing the short positions by FIs in index futures are at 6-month highs. And we're seeing retail positions at 6-month highs in terms of longs. So clearly there is an extreme building up. Somebody has to throw in the towel. But I think a close below 19,500 would see further liquidation of longs by retail, or even increase in shorts by the FIs in the index futures. So my sense is below 19,500, we are heading for some more pain in October, which would mean that 19,200 is very much on the cards. But more than the number of points, it could be a time correction, which would be frustrating, especially for momentum traders.
And we are at 19,500, exactly almost at 19,500 as we speak. Rahul, hi, good morning. Okay, fair enough. Let's talk about a few stocks then. You're describing these two names as basically thrust stocks, momentum, I'm assuming, BHEL and L&T Finance. Describe why you like both these names.
Yeah, so we're looking closely at the stocks which are relatively doing better and exhibiting strength in a falling market. So, two sectors which clearly fall into this category as of the last week is, one is the PSC, which has done very well, and second is the NBFC space. So on the PSC, we are liking BHEL pretty much. The stock technically has formed a rounding bottom, and there is a good possibility that the stock goes on to hit 150 on the upside. On a relative, on the other side, L&TFH, which saw an expansion in volumes on Thursday and Friday, is now seeing a breakout happening, which can also take to a similar target of 150 on the upside. So sectorally speaking, PSC, autos, because of the numbers are going to be announced, and NBFCs, select NBFCs are the ones to go for, which look particularly good on the long side.
Okay. Rahul, what are IT charts telling you? IT had this mysterious rally when everything was going against IT in terms of numbers and the management commentary. IT stocks had a great 3 months after the Q1 results, right? And now we've started seeing profit taking ahead of the Q2 numbers. What are the charts indicating?
Yeah, so we feel that this is merely a retest of the breakout area that the IT index saw in early June. So we've enjoyed like a good period from there, and now it seems like a pullback. So a lot of these large caps, especially Infosys, TCS, have come back to their crucial support areas, which means the risk reward is again becoming favorable for long positions at these prices. So we would put IT in a bargain area where we feel that this correction is a good opportunity to re-enter. And speaking of a slightly macro picture, we feel that the next 3 to 6 months, we could continue to see good performance in the IT space, given the kind of structure that the IT index is holding. So something like an Infosys can be bought at these prices. with a minimal stop loss of around 3% on a closing basis, and we feel the risk reward is decently good enough for a long position here. So IT falls into that category that it is one of those candidates where one can look to buy on this dip.
Okay, IT is to be bought, and that's something you'd want to do. Anything else, Rahul, on your list? Anything on the sell side, or not really?
So, primarily it has been the private banks which have bore the brunt of the selling pressure in this entire fall. And on the contrary, the PSU banking index has actually held relatively very strong. So in case 19,500 does get broken on the downside, the likes of Kotak Mahindra Bank, the likes of HDFC Bank are the ones to go for on the short side. But if it doesn't happen, I would rather stay long in the PSU banking space where we feel the upside has just begun. So something like a Union Bank, something like a Canara Bank, or even a Bank of Baroda for that matter, can be considered on the long side where we feel there is more upside to be had in the coming weeks. So, it's at a crossroads at this point in time, but how we fare at the 19,500 level is what will decide, at least, the moment in this week going ahead.
All right, Rahul, thanks very much. It's always a pleasure having you with us here with those calls and, of course, that overall view as well on the market. New listing alert. There is JSW Infrastructure. That's the big one, which has made it to the market. And boy, what a listing. 26% pop. And the stock's at 150 rupees as things stand right now. That's the second largest commercial private port operator in the country. The first, of course, is the largest is Adani. And now we've got JSW Infra Limited, which is also listed. So, it's a mix of, unlike Adani Ports, which is largely, which operates ports, greenfield ports, that is, JSW Infra, the model is slightly different. They have a mix of ports, lesser in number, but larger number of terminals that they operate. And of course, the other kind of difference in a way is that JSW has got a large captive customer, which is JSW Steel, which is still, I think, about 60% of JSW Infra Ports volumes. But over a period of time, and they joined us, the management has joined us a few days back, the aim is to get it down to 50-50, 50% catering to JSW Steel, and of course the rest other customers as well. So that's a very decent listing in a market which is not looking up this morning. JSW Infra making it to the market. We'll take a very quick commercial break here. We come back and turn the focus back to the commodity space. Manisha is going to be here with that in just a bit. Manisha on the other side.
Welcome back. You are with us on Bazaar, and let's now talk commodities. Equity markets, of course, have been taking it on the chin today. Let's figure out what's happening on the other side. Manisha is here. Manisha, so what's the commodity you're focusing on now?
Well, thank you for that, Surbhi. We are looking at almost everything within commodities taking a dip there. So whether it's about energy, which is trading at multi-month lows, but I'm going to talk about the metal prices because precious and base metals all have seen a decline in the past month, past quarter, and that's exactly how we've started the day today in Asia as well. So there is dollar strength. Dollar index is trading at a 10-month high. We've seen 107 onto this one. That is weighing on. It is going to be the Fed official comments that are going to be coming in this week that the markets will keep an eye on. If you look at the gold prices, then we're trading at a 7-month lows onto this one. So from a high of 1940, we are trading at 1820 right now. So that's nearly $100 of a decline that we've seen in gold prices in a matter of just a week. So that's a 7-month lows onto this one. Silver prices from a high of $26 in this year are trading at around 21.5, which is 1.5-year lows coming in for silver as well. And copper prices, while we've seen supports come into this one, but that one also is trading at a 4-month lows right now. $3.5 almost in the New York session is where it was trading yesterday. So when it comes to copper, we have reports from S&P Global Platts and EIA also suggesting that the copper demand by 2035 would go on to double. But that's a long-term scenario. For the very near term, if you want to buy copper today, it's available at a discount of nearly $60 to $65 a ton. So that really tells you a story there. Tin also is trading at a 5-month lows on LME today. That is because of the slow industry activity that we've seen come in from China. And the supplies or the inventories have been rising quite strongly. That seems to be weighing onto that space as well. Not just tin, if you look at other commodities like nickel, that one has seen a decline of nearly 11% in last 1 month. That's precious metals on your screen. In the matter of last 1 month, that is for the month of September, we've seen 6% of decline come in for gold. 13% of a fall is what silver also has registered. Within the base metal prices, the major declines clearly have come in for copper, nickel and tin. Zinc and aluminum actually in the last 1 month have seen some gains. But on a quarterly basis, all of these metals have ended the third quarter of the calendar year in the negative.
Okay, all right. Manisha, thank you very much for that. That's commodities in focus. Well, let's sort of turn our attention back to the world of stocks and let's start with Marico and why that is in focus. Mangalam is standing by with that one. Stocks up about 3.5% this morning. Mangalam, over to you.
Well, you know, the street is awaiting the second quarter update coming in from a lot of the FMCG companies, Marico being one of them as well. But the interesting bit is that ahead of that, there is an upgrade coming in on Marico from ICICI Securities. They've upped their target price as well from 610 to 670, while they've upgraded their whole rating from add to buy. They expect about 16% growth in the company's EBITDA and net profit over the next 3 years on a compounded basis, and they met the management. The key takeaway was the management's growth aspiration of 8% in terms of volumes, and ICICI Securities has said they like this ambition to grow faster on a larger base itself. In Parachute coconut hair oils, the raw material environment and the competitive intensity has smoothened out, so that should aid them. At the same time, the company is looking at premiumized offerings, so that should aid their value-added hair oil growth business as well. And Saffola, while that is expected to hold margins while maintaining stable growth, foods business is likely to grow faster, and that would aid their margins going forward as well. So all these things make Marico look favorable to ICICI Securities.
Okay, and that explains that 3% up move. In general, I mean, FMCG stocks doing better than the rest of the market today as well. Thank you very much, Mangalam, for that. Sonal is joining in. Sonal, you're watching out for some gas stocks. Why is that?
Well, Mahanagar Gas will be in focus because one of the fields has seen a price cut. That's the HPHT gas field, which is a deep water field, where the prices have been cut from $12.12 per MMBTU to $9.96 per MMBTU. It is a 17.8% cut and lower than the estimate as well at $10.8 per MMBTU. Now, on the back of this, MGL has gone ahead. They have cut their CNG and PNG prices in Mumbai and around Mumbai. CNG prices have been cut by 3 rupees a kg and domestic PNG prices have been cut by 2 rupees per SCM, and the revised CNG prices stand at 76 rupees per kg and domestic PNG prices at 47 rupees per SCM. Now, why MGL has taken a cut and not the other gas companies? That's because MGL has the highest allocation coming in from HPHT gas fields as well. And there's an upgrade coming in from Jefferies as well on MGL. They've upgraded the stock to a buy. Target price has been raised to 1,320 from 1,100 rupees a share. The lower HPHT gas cost and highest priority in allocation provides strong margin visibility. Additionally, gas prices are lower, they are capped as well, so that provides support across the board as well. Recent OEM partnerships should aid volume growth for the company is what Jefferies says, and on the back of that, they've raised their earnings estimates by 6% and 27% for the next 2 financial years on higher volume and margin estimates, so expect the stock to see some green today.
Okay, thanks very much, Sonal, for that. By the way, you got 19,500 gone. We're at 19,486. So 19,492 was the low from last Thursday, and one was hoping this morning that maybe that does come in and act as a bit of a support. But for now, that is gone, although a close will be important. Eicher Motors is the next stock in focus. Surabhi is here with details on that one. Surabhi, over to you.
Thanks so much for that. So Eicher Motors is reacting to the September sales numbers. The Royal Enfield sales, even though they were in line with the Nomura estimates, they were down 4% on a year-on-year basis as at close to 78,580 units. The CV sales were up nearly 9% on a year-on-year basis. Now Nomura in the note have highlighted that Royal Enfield's registration growth was 8% on a year-on-year basis for the month of September versus 22% for the entire industry, and this is the slowest in their two-wheeler coverage sector. And also they highlighted that market share could face more risks for the company as the competition intensifies. So that is why you can see the stock is reacting negatively.
Okay, all right, Surabhi, thank you very much for that. That's Eicher in focus. Well, we're going to sort of take a quick commercial break here with news that we're down 150 on the Nifty. On the other side, our special segment, it's the economy will take up all the action. Latha will get chatting with Jitin Makar of ICRA and Somshekhar Vemuri of CRISIL Ratings to discuss India's credit rating picture. Stay tuned, that conversation coming up next.